Hey everybody, good morning. Back to normal, back in the studio, back in the, hopefully everybody made it home that came to the VIP event last week. Gaton, Gaten, Craig, Rex, Sergio, Diane, Dan, Ivan, General Rush, good to see you, sir. Ed, Arturo, David, Kathy, Frank, Amy, Joy, good to see you. Ted, Stephen, Douglas, Dan, Don, Peggy K, Valerie, Larry, Rosalind, Craig, good to see everybody. Hope everybody had a fun, safe trip back home. And hopefully you got your Morning Monster Mega Mugs all ready. For those of you that aren't VIPs and didn't come to the in-person, we introduced the Morning Monster Mega Mug. And I'll have to set up a web shop so that you can get your very own. It was a perk of coming to the in-person event that they got introduced to them. So I'll be working on that in the background to get that up. And for those of you that are channel members, you'll have a coupon code in the YouTube members area. All right. And I'll see about a TTL discount code. We'll see what we can do there. All right. This is on my own. The company's not part of that thing so far. And it's a YouTube swag thing since it's the Morning Monster Mega Mug, right? Anyway, moving on. And retail sales come out. A little bit disappointing. Gas stations, motor vehicles, parts and dealers down. Oh man, let's share the screen. Oh, I have the levers button pushed apparently. So we got motor vehicles down. We've got furniture and home furniture stores flat. Electronics down. Gas stations down pretty big at 1%. Whew. Department stores down. That's kind of expected, right? But general merchandise altogether up slightly, 0.2%. So even though department stores were down, there was enough other general merchandise to actually make the sector positive. We had miscellaneous retail stores down 0.3%. And food, despite all the TTL, that was actually in March, everybody. But, despite all that, food, services, drinking places down 1.5%. That's probably the biggest downer on the list. So between gas stations and food, it's kind of like your big losers there on retail sales. I don't know. I expected it to be light, but the market responded positively. We didn't shut her down on Friday. Getting a little juice on everything. So, yeah, awesome, Dawn. And the coffee tastes better from a JT mug. Kimberly, love to see you. Yeah, happy St. Patrick's Day, everybody. I do have my, I got green pants on, but I didn't want to wear a green shirt because this guy right here behind me is a green screen, and I would just be clear. This is what happens when JT wears green right here. This is a green monster, and it, looks black, or it's actually clear because you're seeing right through me. Anyway, that's retail sales for you. Came in kind of as expected, I guess you might say. And yeah, so Friday we got a nice little bouncy bounce. Can we stick the bounce? Do we get some continuation? I think we might see a few days of continuation. We do have the daily roadmap line above us. We do have that 618 retrace of the whole drop above us. When we put it all in the right spot here, potential high there, potential low there, that puts the 618 zone right in here, the danger zone, if you will, for a reversal. If this was just the first move down, right like that, this be the retrace, and that be a continuation, right like that. That might be what we see. Gotta be careful. Gotta be careful out there. Nothing's, we don't get any guarantees in the market. Nothing, no guarantees. I mean, there's nothing. Don't take anything for granted in the market. I say that over and over and over and over. You know, perma cautious. Core retail sales came in basically in line. Retail sales in general came in light. You know, not, I guess, not negative, but way down from what we were expecting on a, surprised lower. It wasn't a surprise to me. Anybody surprised? I mean, I basically said they're going to announce it Monday because something like it's going to miss. And I mean, there you go. There you go. I can't make this stuff up, right? And tomorrow, not really anything. I mean, we get building permits and housing starts and those sort of things, but not really big market moving numbers. Usually not. On Wednesday, though, this is the big show this week. Right here, the market may not move much into this. Right here, something to keep an eye on. Remember, don't forget, set your alarm at 1:50 p.m. Eastern. I mean, that's 12:50 Central, 11:50 Mountain, 10:50 Pacific time, all the way on the West Coast. Why do that? Because we're gonna have volatility. The market is likely to move. Market's likely to move. For those of you that are channel members, I've kind of been doing the live stream for you while this happens the last few times. I probably do that as long as there's not something on my calendar that conflicts. I'll have to double check. Like being out last week was just a blur, or doing the in-person VIP event last week was a blur for me. Saturday, I pretty much spent half the day just like catnapping, comatose on the couch, just trying to get my energy level back up. Put it all out there for you all. So that's the big deal on Wednesday. Thursday, kind of benign. Not really. I mean, we get unemployment claims like we always do. Friday, though. Friday. You know what's special about Friday? Special about Friday is it's the third Friday of the month. This is the end of the quarter. Is the quad OPEX or quad witching OPEX, quad, triple, however, different people call it different things. It's the end of the quarter, end of the month, end of the week. We'll see what happens. Triple witching, I don't know. Probably going to be the biggest options expiration so far this year. That's likely what it's going to be. That can bring some volatility. Goose and I, Lieutenant Colonel and I, were talking last night or yesterday afternoon. Puts, near-term puts. People have loaded up on near price and near-term puts. What does that mean? Is here. Just go back over here. Here is the S&P right here, banging around in this area. There's a ton of puts like right in this area. Right. Just clean it up. There's a ton of puts spot right in this area. Right. Ton of people have been buying puts like crazy. Oh my gosh, we're gonna go down. Now they bottom out just not very far too. So when you look at it, they're just kind of in this zone right here, not really very far out. Lots and lots of puts kind of through the end of the month, just in this place. And it's like that on a lot of charts as we came into the daily roadmap line. Now, what you don't have, there's not a lot of puts down here. And there's not a lot of put premium down here. It's kind of crazy. And it's not out this way. There's not a lot. It's pretty devoid. There's not many calls. The call, compared to how many puts and how much premium sitting here, and this is across many, many stocks, this up here is devoid. Think about this a minute. This OPEX coming up on Friday. How can the market essentially screw as many people holding these puts, expecting the market to fall out of bed? How can the market screw them? Taking a rip. Maybe ended up in here. in that resistance zone by Friday. Be careful. And we have FOMC coming up. We have multiple layers of resistance coming up. We've got that. We've got this. Lots of cautionary zones to watch out for. If we're going to go ripping higher, there's our first target. There's our second target. Right up in there. We'll see. We'll see. You know, I kind of outlined this whole thing that we would probably chop in the election. We'd make a higher high shortly after the election, after the inauguration, and then we'd probably get a big retrace. And then the next thing I said when I outlined all this last summer, we were over here when I kind of outlined this path forward, which kind of chopped around the election. Pretty good. Made a higher high coming into the inauguration. Did it. Big pullback after that. Did it. Stick around. Sometimes I get lucky on this stuff. The thing I expected next, when I outlined this all the way last summer, was a pop to new highs, possibly up to this 6,600 level. I've been saying since 2022. Reminder, that's where we were in the bottom, late 2022. 6,600 was the top I expected from the bottom. That's crazy. We might do this into the summer. Then what happens? Down again. Down again. So be very, very careful in the coming months ahead. It's treacherous landscape out here in the market. Now, I got pretty excited because this came to the bottom. I said we might need this to bottom out before we can reverse it and take it back to the top. That stock's above their 20-day moving average. Cha-ching. Plus. Met that. Did that. S5FI got down into that. I also said this may need to come into this bottom quadrant area, this lower area just above, dip in the 20s. That's what we did. We dipped down to 25. This one has not been to the top yet, since it was down here as we came into this year. This is stocks above their 50-day moving average. In case you don't know, haven't seen this before, S5FI. I thought we might need a little retrace after retesting that trend line. Now we're set to rock and roll higher. Another check plus. That's two things going for us. S5TH. This one has me a little bit concerned. Not even going to sugarcoat it a little bit here. We broke down below that uptrend of lows. It was only two lows. We broke down below it. We're coming up to back test it. The two scenarios we usually see when we do this, we either hold it or this was a fake out and we go ripping back the other way. I hope for this one. Check plus. Not really looking forward to that one. Not what I want. I don't want to see this go back down here. Not what I want right now. I'd like to go on back higher. Now, we look at the whole thing here. Higher low. So far, higher low. High. Higher high. This is possible. With this higher low, we're going to go back up here, make a higher high, up above 90. Similar to what we did all the way back over here. Possibly out later this year. And then roll. These are giant market oscillators. There's no way to, the market always does this. We go to the top, we go to the bottom, we go to the top, we go to the bottom, we go to the top, we go to the bottom. We kind of scraped the top. We didn't really hit the big ideal level. We just barely poked above 80 a couple times. Making a higher low here. Take it up. Possibly even push it into the 90s. That's usually where we make a big top. When we go up above 90. That's one to keep an eye on right there. The dashboard says stocks above the 20-day, the fast speed, short term, potential to go higher. Mid-term, stocks above the 50-day, potential to go higher. Long term, still questionable. Everybody understand what we got cooking? Dun, 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 dun. If we pop back up in the 47 to 50 area, clearly back above this trend line, which we got close. I guess even back above 50, 45. I mean, even back above 45 right now could set us up to rally back higher. Now this right there was a pretty, this is funny because this isn't even prices in the market at all. It's like, how do you trade this? You can't. Like, this is just the number or the percent of S&P 500 stocks above or below their moving average. It's kind of weird when you look at it, how this all worked out. Right? When we definitively broke down below that line, we did the head and shoulders extension, plus a little extra. That was support, 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 broke through, resistance going higher, and flushed it on down. It is just this, blows my mind a little bit that this works like this. Look at that, support, support, support. And then we broke down, we back tested it, and went on down. Kind of like a wild blend in there. Now, be careful on your selling may go away thing. Be careful. Be careful getting too caught up in all that. I remind you, while we typically have a little choppy action in May on the S&P, June is really the bigger pullback, seasonality-wise. And we look at this one, selling May is usually just kind of a sideways in May, and we keep ripping on the NASDAQ. Potentially, we've bottomed seasonality-wise. We're in the zone on both of these. This one tends to go a little early. This one tends to go, right in where we are. That's that chop on OPEX, and then we take off. So watch out. We may have a little chop in store. Right in there. Potential to get ripping, though. We'll see. Don't ever have to stay on the seasonality path. We can always take a diversion. Take that left turn at Albuquerque, like Bugs Bunny says. So that's the layout. That's the environment. The list is short today. Not very long today. So I mentioned last week we could talk about tariffs. And I'll tell you what I learned about tariffs in my, I don't know what it was. It's probably like a 301, junior level class. I need a cleaner chart. Let's jump on over to something that's more clean. Just kind of pan it out of the way here so I can draw. Ignore what's on the screen. Ignore the man behind the screen for a moment. So I was kind of banging around trying to figure out a good set of numbers yesterday to talk to you about. So let's say we make a widget. All right, widget doesn't matter. It can be steel. It can be Barbie dolls. It can be the teacher used the example of Barbie dolls. Let's just use a widget that we can make anywhere. A phone. All right, a cheap phone. Whatever. Let's say here in the United States, we make them and it costs $90 to make the phone. All right, that's cost to us. But if we go make it in China or Canada or Mexico or wherever, somewhere else, we can make this our cost to us, all in, getting it, from raw materials to produced into the U.S. market. This is This is all in costs. This is what it costs us to get it to the customer. And this is what it costs. And we're just talking about just a phone right now. All right. So this is what it costs if you make it in the United States. This is what it costs if you make it anywhere else. How in the world do you sell that and make any money? All right, you're going to automatically make $10 less per phone by making it in the United States. It's cheaper to go make it anywhere else in the world. That already is what they call a competitive disadvantage to making your products here in the United States. Say American made's better. This is the same equipment, same raw materials, same everything. Your labor costs and whatever other costs, environmental costs and licensing, permitting fees, whatever, your direct costs to make it $10 higher in the United States. Now, let's say we sell it, bring them to the market. You're automatically making more money by making it somewhere else, right? Anywhere else, even the shipping costs added in. It's only $80 cost. Everybody with me? Everybody else understand? Right there. This is just a product, just making up a phone. Make believe phone. I believe phone, if you will. Now, let's say we want to put a 25% tariff on this. 25%. So that automatically, doesn't matter where in the world, whichever country, all the countries, we're going to put a 25% tariff on phones. Now, those phones made anywhere else in the world, as soon as they get to the United States, has a $100 cost. All right, 25%. Talking about a 25% tariff. So $80. 25% of that is $20. Everybody with me? So you take 80, add 20 to get to that $100 cost. Now, all of your consumers, if they're going to buy those phones made anywhere else in the world, $100 is the minimum cost. Unless you're going to take a loss on what it costs you to produce the phone. Now, make them here in the United States, $90. But pricing, now, what's the difference here is $10, right? There's a $10 advantage to making it local. But what that does, we're going to price this. What they do automatically is bump up the cost to $100. This is why people say it's a tax on everybody when you do this. Because even the local made stuff is going to raise the prices to compete with this. They're going to be the same. It's not going to matter. You can't, if you lower the cost over here, you can't compete. You'll lose money. Every phone you make, every phone you sell, you lost money. But now, if you make them local, you just made a bonus $10 every time. This, you're break even. This, you're making a bonus $10 by making it local. It's a protectionist. What it does, it protects the industry in the local country. And it taxes the consumer because any dollar, even $1 over that the tariff adds to the price, $1 over the production cost of making it local in the country, basically adds a tax to the people of the country. That's why people say it's a tax on the people of the country, right there. Because this price will automatically come up to meet the market price of that phone that's made anywhere else in the world. Isn't that fascinating? This is how this works. So it's a protectionist. What it does, it protects industry. It protects that industry. So they're not taxes. They're a protectionist practice. And subsidies on farm production is the exact same thing. The exact same thing. If you subsidize farmers in the local country, it is the exact same thing. That's a mind bender because we spend hundreds of millions, if not billions of dollars every year subsidizing farmers in this country, in the United States. Now, people like Canada put tariffs on dairy products for from the United States of like 250%, 230%, something like that. So think about that a minute. We produce milk way cheaper than Canada can. So they put tariffs on our products basically to protect to raise the prices of dairy in their own country. It's kind of crazy. But our dairy is subsidized. Now that goes into the whole bigger conversation too, is like when you're talking about that $80 phone, lost my drawing tool, $80 phone, when it's produced in China, maybe they're subsidizing the price by $20 already to get it down to 80. Or maybe they're subsidizing it on down and it's only 60 cost. But they're able to export it out, and because making it in the local country is 90, they can all of a sudden make $30 just sending it to the United States and selling it for 90. That's a $30 profit. That subsidy for local production, this is why everybody critiques China and their subsidies on manufacturing and stuff like that. Now it gets way more complicated because you have tax subsidies and property taxes, all these things that go into the cost of anything we make anywhere in the world. So, anybody got questions about this? That's kind of how tariffs work. That's why it's a protectionist practice. We don't really make things here. Our permitting costs, our environmental costs, we have very high costs to doing business here in the United States. And as you say, we're a service nation, but we have to make some things, all right? The burgers don't make themselves, we don't get fast food imported. So we do have to make some things here in the country. So that's a little more, detail about tariffs and how they work. But, it can be a tax on the local people. It can be. It doesn't have to be. And some stuff produced other places is not necessarily cheaper. Like things that are very, very expensive to ship may not be cheaper to produce other places. And then there's also the market demand. Like when you look at nuclear fuel, for instance, there's a very limited market for nuclear fuel. And cool, we're going to upgrade my mic all of a sudden. So nuclear fuel is made in Russia. Like they've kind of locked down the market. And like 4, 5, 6 presidents back, the vice president pretty much locked in and rallied for that to be that way. And we're talking about Clinton's vice president. Rallied very strongly for Russia to be the number one nuclear fuel producer. And now the United States has kind of given up its production capacity. It had given it up. We're trying to reestablish production capacity for nuclear fuel. That's one reason why when you hear about SMRs and small modular reactors and micro reactors, it's been a big holdup, is because we don't produce the fuel for them in the United States. Building the factories to produce the fuel for them is a very, very expensive process. And there's limited customers. Like the customer base isn't there. Like it's not online. It's like a chicken and egg problem. And the government's looking at tariffing Russian nuclear fuel to help subsidize. Essentially, it's a subsidy when you do that. You can think of a tariff as a subsidy on local economy, basically. Very much the same thing. Trying to tariff that so that we can subsidize bringing nuclear fuel production back in the United States so that all these ideas on how to use nuclear power can actually have fuel. Because who wants to buy from Russia when we got them sanctioned, right? Sanctions are a whole nother joke too, but I digress. All right, moving on. Let's talk about how we can make money today, shall we? This baby, let's keep her going. We got through the 30 minutes on Friday. I like it. Look at that. Back tested. Moving on. Heading on up to the 1 hour. Right in it right now. If we get through it, like to see it come up. Back test. Get going. Then we'll be heading on up to the 4 hour, which is on up here around 5,800. Right in here. The daily just happens to be right where the 4 hour is. So there'll be a significant resistance right there. That's what I would call that. Significant resistance zone. Coming in right there. When we look at the high to the low on ES, I'm still on the clean chart, I know. I'll have to flip back over. That's the resistance. Start of the resistance zone. We have the 618 right above that. So a nice big fat resistance zone right there. We get through it, probably set for going higher. So those are the things to kind of watch for. I would love to see this reversal take hold and hold, stick. Do have a significant levels of resistance going higher here. We got the July high. Support for like 3 days, and then we broke through it. Probably going to be resistance going higher. It was support for 3 days, broke through it. Need to get back up through it. Need to just take off right back through. Flip over to my regular scheduled chart here. Keep all the things drawn. That's what we got cooking. We'll dive down and talk specific actual prices and levels at the end. Stick around. NASDAQ. Potential bounce. 618 bounce. That's a measured bounce. That sets up the bigger target. ES did a 618 bounce also. That sets up the bigger potential target. That's why that 660. 600. It's potentially the next place we're going. And it could be well out into the summer. Russell. I expect this to stop right in this zone right here. Right in here. That's the danger zone. I expect it to top out there while ES and NQ go make higher highs. Oil, still chopping around under that trend line. This is still potential to backtest, reject off, take a swing lower, and then take a swing higher. I expect higher volatility. Even though this was a big spike and a big retrace, I expect bigger volatility in oil. Caution. Gold, watch out for the retrace. That was potentially the last little squeak for now. Just be careful. Silver already showing signs of retracing. Came up lower high. Would not surprise me one bit to see this. We'll just clear it off at this point. That potentially wave one up. Would not surprise me one little bit to now get the bigger retrace. Potentially this was like 1, 2, 3, 4, 5. Now we got a 1, 2, 3 right down in this zone. If we do that, sets up the bigger potential. Right there. And that's silver. So even though it seems like we maybe missed our opportunity here, be very, very careful. This could get a larger retrace. We could be right back down here where we were 2 weeks ago on silver. Don't feel like you missed out yet. Gold, potential 1, 2, 3, 4, 5. This one also potentially playing out here. I'm just going to clear all that off right there. Look, 1, 2, 3, 4. That doesn't really seem like a long enough 4. Not sure. Doesn't have to meet the proportions. That low, that high. Look where the 618 comes out. If that's 5 up, probably do that right there. Be careful. If you feel like you missed out on this last rally on gold, may very well come right back here. Bitcoin, despite the nice little pop, still struggling to get through the frickin' roadmap line. Just pop. Come on. BTC USD on the all-time history. This one not hitting yet. So we're stuck there on the futures. On the spot markets, still well below it. We need to come up, bust through it. Bust through, retest, hold, and get going. That's what I really need to see on Bitcoin. Really, really, really. And the downside potential is still fully testing that breakout level. We still have that potential to come down to the low 70,000s. Dip below 75,000. Still have that potential as long as we're underneath this downtrend of highs and this daily roadmap line right there. There is still the potential to go retest the breakout level from all the way back over here before the halving. Be careful. Ethereum, I've been pretty clear. Looking for this to hold above this 1600. There's actually a secondary, the lows from right here are important. We could potentially dip in there and still go higher. But if we get below new lows, that really tips the odds we're going down to triple digits, below 1,000. NKD coming back up strong. Looks like it was a fake out. I'd love to see that crack back into the 38,000 area, rally back on up to 40,000, break on out the top, and go cruising up here to 40, 44, 46,000. Maybe even crazier levels than that. Could go even up here to 50,000. That'd be a global liquidity explosion. Be careful. We're seeing some central banks do extraordinary liquidity measures. That's the market's turning. That started a couple weeks ago, and now the market's turning. Dollar here. As soon as this consolidation here gets done, I expect it to make the next move down right there. All right, I go pull everything moving $2 or more up in the pre-market, put it on the gainers list, $2 or more down in the pre-market, put it on the decliners list, which at this point is becoming, looks like kind of lackluster. And we go hunt for opportunities in this list. The list wasn't super long today. May not take a long time to get through it. DocU already retracing. We've got resistance at that 618 level. Right in here. We get above it. 113 is the target. eBay. This one failed to break on up higher. 73, 74. Still the upside. Nice potential. This could be a 1-2, and this could push it on through. Maybe even higher levels up here. LUMN. Still below the daily roadmap line. Cautionary until we get above like that high right back here. Then we could go on up potentially to test the 618 level. That high, that low. That 618 level all the way up in here. If we can see that pop up in here, there's the resistance to going even higher. This is a low price ticker. $5 is low priced. Anything under $10 is low priced. That may not always follow the pattern when they're low priced. And why? It's because the big players that push big volume don't typically play in these low price tickers. So it limits the market And then when you have limited market, you have limited participation, and that can kind of skew the results on the charts. Doesn't mean it won't work. It's just sometimes it doesn't work. And it's often enough that I warn about it. Roblox, if we can hold in this zone, break back through the 618, we'll get the move on up there. That's what we have to be looking for. TBT. Stuck on the roadmap line. This is under the roadmap line. Caution. Nice reversal cooking. I would not. It's not a guarantee that we're going higher. Certainly. Certainly not. This may actually go lower from here. Be very careful. Till we can get back above this area right over here. That 3650 area. That would indicate we might be going higher. But if we don't, we may glance off of that and go lower. How low might she go? That high, that low, that potential rally up into that zone would push us down to the low 20s. So more chop is what that looks like on TBT. Nothing guaranteed. TCOM, trip.com, potential to bust on up through this consolidation here around 70 and push it up to 80, the 80, low 80s. WFC, just kind of hovering. Potential to bounce as we head into financial earnings. We came up just shy of my target zone up there. Break back up through 75 can take us up into the 80s and the big target zone that I've had up there for a while. Netflix working on the bounce. Man, that's a vicious bounce too. Ronger, hope you're got all of that off. I think you said you did. Watch for this to break above this consolidation. Head on up. Go cruising at 1100. SAIC, for those of you who don't know, don't remember, haven't heard the story, this is actually my family engineering company is a spinoff from SAIC back in the 80s. This right here is the resistance. That right there is more resistance right on top of it. We get through that, see this rally on higher. FNGA, which is the ticker formerly known as FNGU, potentially going to bounce right on up here to 764. PTIR, maybe there's a chance that PLTR is done on the downside. There's the chance. Did hit the 4-hour roadmap line. It spent quite a few days sitting on that. If we break back higher, get through that 618 zone, it does have 2 gap downs there. So this is it's an interesting little section. Got resistance right there. If we get through it, we take it on up to 135 potential on the next extension. And that could even go to 145. So here's the resistance zone right in here. Get through it. It sets us up for the target zone right up in here. NVO. Then we still got downside potential. Like that could have been. As long as we're below this roadmap line, though, I would be very cautious taking longs. Be aggressive with your stop because lower lows, grinding on down in the 50s, looks very likely when you zoom out and look at this chart. It just looks very likely to go revisit that consolidation right there. Just a quick little dip down in there would work for me. Quick little dip, and then we can go higher. Although a prolonged dip may preclude, or proceed, wrong word, not preclude, proceed going even lower. GES, guess. Guess what? Guess has not been very bullish. Holy potatoes. 3-wave up into that high. That low, that high. Possibly a 618 bounce, but this is a 3-wave move up into, well, possibly. Maybe it was a 5-wave. Maybe that was a 2. Maybe that was a 1, 2, 3, 4, 5. I could make the case that this is bullish. I could make the case it is bullish. That move, that move. If this is going to break back above the daily roadmap line, we might actually see this do a big outperformance similar to ANF. Right here. This is one. Maybe you want to pick up a share or two at 12, because if we go up here to 80 to 150, holy bananas, that'd be a 10xer right there. I might buy a couple shares. Need to send me an alert. Send me an alert just above where we are. I might go pick up a few shares. Send an alert right there too. SMCX is just SMCI's leveraged. SMCI still respecting the roadmap line. Be very cautious here. Sticking here, staying under the roadmap line. Support's going lower. I have a habit of drawing these things on the chart years ahead, and we do it at some point in time. QFIN. Well, I don't know that I've ever looked at this chart. Let's see. 618 bounce. Potential aggressive move up and a retrace. Lowest low. 63 would be the area I would be careful about. If we pop on up in there, we'll probably get a retrace back down 30s. Or we go higher again. ARQQ. I don't remember why I know that ticker. That is a SPAC. That is a reverse split. This is a dumpster fire. Be careful. See limited. We're in that 618 zone. Watch for a retrace. Back down to the roadmap line. Possibly even back down to this area right here. We had that prior highs. Before we can bust on up through. Just be careful. If we just pop on through, set up the bigger move upside potential back to 525 on C limited. That'd be a crazy move from where we are at 129. PLTY. Don't trade this stuff. Yield max is dangerous. Don't get sucked in. Be very, very careful. BX. Blackstone. Still working on that bigger retrace. Came up a little shy of where I ideally expected it to go. Doesn't mean it won't pop and go higher. Got a lot of stuff to get back through. This resistance that was support didn't even provide much support on the way down. So if we could slice through that daily roadmap line, that right there, that's resistance. Get through it. Look for upside targets, possibly up at that 210, 215 area. If you're not familiar with the roadmap line, click the link under under me right over here, my name. Go to my channel homepage. Pinned to the channel is a video that basically gives you everything you need to know about it. It tells you how it works, gives you the code. If you want an easy button, link is in the description. Click the more button down below me here. Expand it out for $5. You get a masterclass that's all formal, along with a weekly watch list and all sorts of stuff for the roadmap line and how it works and instructions and all that sort of stuff. So if you don't have it, that's the way to get it. And Blackstone may be heading on lower. And decliners, INCY. Took a bath. Ouch. Let's see what we got. Zoom her out. That's a bit of a big downtrend here. Not sure I would be very interested in this at the moment, unless you're just trying to pick up something doing a measured bounce. Potential for a measured bounce here. That high, this low. Set up the next upside potential somewhere in this zone right in here. Affirm. And Potential that's 5 up. If it is, that could lead to a deeper retrace. We could see this dip right back down in here. If we do that, we set up the bigger potential upside. Could be something like this up here for the next move. Throw this out here. I'm actually going to throw an alert down here. Check back in on that one later. And last but not least, USA Rare Earth. My gosh. Looks like another SPAC. SPACs do a SPAC pattern, which is usually ends up making a big dip. Be careful chasing that one right there. That's the end of the list. Bonus trade, I'm not convinced. We are definitely for sure 100% going to bounce higher, and I'm very cautious with my money right now, so I'm not going to get involved in longer term potentials yet. But if you wanted something, some of those ones I identified, like eBay, might be a pretty good one, especially since we're down below the entry we had last week. This one, nice risk reward opportunity for that 73 zone. I feel like this is one of the strongest charts I looked at today. Right there. That's if you wanted something to potentially get into. And if you wanted something that's a little less likely to work out, but longer term, this chart, guess I might actually go buy some shares of that here in a minute. So, will ALB do anything? Doesn't look like it. Still has that lower downside potential right here on ALB. We've not found a bottom in ALB yet. I have no reason to believe that this is done yet. ALB is not a SPAC, so don't necessarily believe this is done yet. And this has bigger downside potential hanging out here to go lower low than we did back in COVID times. Be careful. As far as what to watch today, let's go dive in, take a look. Check it out. Here's the levels. So we are pushing through the 15-minute. That makes the 30-minute the one we need to watch. So for the S&P right here, here's your zone right there. We need to watch today. We can get through that zone. Talking about 56.94, 57.30. Got to get up through that. Come up, back test it. Start moving higher. Then we go up to the hourly. That sets us up a resistance zone right up here, just below the 618. Talking about 56.96 to 5800. I'm not sure we can get that high today, but if we do, there we go. Then we have the 618 to get through. We've got the 4 hour just above that. We got the daily in there too. Got to work through all these levels. Got to work out through all these levels. Once we get above that 59.50 area, probably set for going on higher. That doesn't mean that we won't have a pullback along the way. Highly likely to get some of those. Highly likely to have down days. That's what we're looking at right there. Make sure if anything I said was helpful, beneficial, you share with a friend or like it, like the content, give me a thumbs up. Thanks for coming, everybody. Be back again. Same bat time, same bat channel, 9:15 tomorrow for another Morning Monster. Have a great day. Be careful out there that the account you save may be your own.